Well, Growers Edge, I think, has made us more money by allowing me to survey the local bids that I'm in the area that I want to sell my grain. The local elevators and the ethanol plants know that this information is out there, so they've got to be competitive if they want to get the grain. You know, we've been able to maximize our return on our farm.
Good afternoon, welcome to GrainTV. My name is Cody. Bills, Brock Shimano. Today is Monday the 13th, and we had the markets moving a bit higher here today. Let's take a look at the trading platform to see where we closed off the day. Corn for March delivery trading up 1 3/4 cents. Beans trading up 15 3/4. Wheat in Chicago trading up 4 1/2, and Kansas City wheat down 6 1/4 cents. Brock, we did have some surprises in the export inspections number this morning. What were they?
You know, we did see soybeans and wheat beat the analysts' expectations. Corn came in on a little bit on the low side of expectations. If we take a look at the numbers here, you know, wheat came in at 25 million bushels, corn 20 million bushels, and soybeans 59 million bushels. But keep in mind that we did get some revisions on Friday in the USDA report to soybeans and to wheat for both the anticipated export sales for the year. If we take a look at where we're standing for this marketing year, the green line is the seasonal pace to meet that newly revised estimate by the USDA. You can see that over the better part of this year, we've been beating that seasonal pace, and as a total, we're running about 209 million bushels ahead of pace for soybeans. Similar story for wheat. Over the beginning part of the marketing year, we were beating the seasonal pace pretty handily. Over the last part of this marketing year, we have been slowing up just a little bit, but we continue to run about 108 million bushels ahead of pace there as well. So it was warranted by the USDA to make these revisions a little bit higher for the export sales. We saw a 25 million bushel bump up in wheat, 20 million bushel bump up in soybeans, and corn we fell a little bit short this week. But all in all, pretty good report for both soybeans and wheat.
Yeah, absolutely. And you know, when you take a look at soybeans here, you'll also notice that we rallied very sharply today. Now, these are areas that we were unable to hold on Friday. So the question is, why were we able to come back here, hold those, hold that $12.95 price level here that we couldn't hold on Friday? I think part of it was because we just had positive news around the board. We had the export inspections that came out well above analyst expectations. We also had an export sale of 140,000 tons of 13-14 beans to unknown destinations. That was positive, and we also had meal trading higher here. I think all those reasons just helped us move back up to the highs here that we saw on Friday. Now, keep in mind, though, there is a moving average up here. It's a 100-day moving average. I think that will offer up resistance. We're right around that $13 price point. I think that's going to offer up resistance. And even if we break through that, I think we could see resistance all the way up to around $13.10. The bottom line here is when I look at this chart here, I'm nervous. I'm nervous that this is not going to be a bullish breakout. This is not going to be a bullish, trend starting here. I think we're bouncing. I think we're going to hit some resistance, and I wouldn't be surprised if we end up trading down a little bit by the end of the week. Brock, we do also have, for soybean traders out there, we do have NOPA crush numbers coming out on Wednesday, so pay close attention to those. We'll give you the analyst estimates tomorrow on GrainTV.
You know, it's kind of an interesting trade for wheat today as well. We saw the Chicago contract moving a little bit higher. Seen the Kansas City contract backing off a little bit. I think a couple things were pushing the Chicago contract a little bit higher, as we saw Egypt actually do a tender over the weekend for 55,000 metric tons of SRW wheat, so that would affect the Chicago contract. And then we saw Kansas City, I think a little bit of the weather premium is being taken out there as well. We don't have the winter kill scenario going on this week like we had last week, so we had some premium built up last week. I think that's starting to be backed out this week just a little bit.
Yeah, I definitely agree with you, Brock. You know, when you look at that SRW wheat, we traded off pretty sharply following the report. I think Egypt took advantage of that, bought up some of that wheat. So I think there is a little bit of buying coming back into the market for the wheat contract. Other than that, guys, that wraps up today's show. If you have any questions about what we talked about today, give us a call at 877-472-4607. And remember, if you're interested in taking a demo of our mobile trading platform, you can do so at grainhedge.com. Thanks a lot for tuning in. We'll see you here tomorrow.